The stock market can seem like a complicated place, but it's simpler than you think. Think of it as a giant shop where you can buy and sell pieces of companies. These pieces are called stocks. When you buy a stock, you're buying a tiny part of that company. The stock market is a way for companies to raise money and grow their businesses. Instead of borrowing money from a bank, they sell small pieces of ownership to the public. This allows anyone to become a part owner in some of the biggest and most innovative companies in the world. Understanding the stock market can seem daunting, but it's essential for anyone looking to grow their wealth over time. It's never too late to learn how to participate in this exciting world of investing. Let's dive in and explore the basics of the stock market together. Imagine your favorite company is a giant pizza. When you buy stock in that company, you're buying a slice of that pizza. Each slice represents a small ownership stake in the company. Stocks are also known as shares or equity. These terms all refer to the same thing, owning a piece of a company. When you own stock, you're entitled to a portion of the company's profits and have a say in how the company is run, though the extent of this depends on how much stock you own. Companies issue stocks to raise money for various reasons, such as expanding their operations, developing new products, or paying off debt. By buying these stocks, investors provide the capital that companies need to grow and innovate. Think of the stock market like a giant auction house. Buyers and sellers from around the world come together to trade stocks. They use a stock exchange, like the New York Stock Exchange or NASDAQ, as a platform to make these trades. When you buy a stock, you're buying it from another investor who wants to sell it. The price you pay for the stock is determined by supply and demand. If more people want to buy a stock than sell it, the price will go up. Conversely, if more people want to sell than buy, the price will go down. Stock prices are constantly changing throughout the trading day, influenced by factors such as company news, economic data, and investor sentiment. It's a dynamic and exciting market that's always on the move. Section 4. Why invest in stocks? Investing in stocks can be a great way to grow your wealth over time. When you invest in a company that performs well, the value of your shares can increase, allowing you to sell them for a profit. Additionally, some companies pay dividends to their shareholders, providing a regular stream of passive income. While investing in stocks does involve risk, it also offers the potential for higher returns compared to more conservative investments like bonds or savings accounts. Over the long term, the stock market has historically trended upwards, making it an attractive option for investors seeking to build wealth over time. It's important to remember that investing in stocks is a marathon, not a sprint. It's essential to do your research, choose companies you believe in, and have a long-term investment strategy in place. Section 5. Risks and rewards of the stock market. Investing in the stock market is like riding a roller coaster. There will be ups and downs along the way. The value of your investments can fluctuate, and there's always the risk that you could lose money. One of the biggest risks in the stock market is market volatility. This refers to the tendency for stock prices to fluctuate, sometimes dramatically, in response to various factors. Economic recessions, geopolitical events, and even changes in investor sentiment can all contribute to market volatility. However, with risk comes reward. Historically, the stock market has provided higher returns than more conservative investments like bonds or savings accounts. By investing in a diversified portfolio of stocks and taking a long-term approach, you can potentially weather market downturns and come out ahead in the long run. Section 6. Conclusion: the importance of understanding the stock market. Understanding the stock market is crucial for anyone looking to take control of their financial future. Whether you're just starting out or are a seasoned investor, it's essential to stay informed about market trends, investment strategies, and the factors that can impact stock prices. Remember, investing in the stock market is a journey, not a get-rich-quick scheme. It's important to do your research, invest wisely, and be patient. By following these principles, you can potentially harness the power of the stock market to achieve your financial goals. The stock market can be a powerful tool for building wealth and achieving financial freedom. Take the time to educate yourself, seek guidance from financial advisors when needed, and never stop learning.